gold and silver futures market is decoupling from the gold and silver price, meaning the futures market is not really setting the price as well as it used to, and that is because open interest is at an extreme low in gold of near 350,000 contracts. I'll show you how low that is relative to the years past. We've only gotten close to that level during the 2008 financial crisis. And volatile gold and silver prices are a major consequence of less interest, less open interest, and less trading in the gold and futures market, because it doesn't break. The influence of the gold and silver futures market on the gold and silver price doesn't break overnight. It's not one thing that is suddenly there and suddenly isn't, but it erodes. And we are seeing that erosion now because as open interest remains very, very low, meaning liquidity in the gold and silver futures market is very low, that makes the price more volatile. And that is exactly what we are seeing now. So be careful what you wish for. We do all wish for the gold and silver price to decouple from the futures market, which is an unjust price because it sets the dollar as the money and gold and futures as the commodity on which they're being traded, which is not the monetary reality of things.
Everyone talks about wanting price freedom, but very few are actually prepared for what that really means. As Rafi Farber explains, gold open interest collapsing toward 350,000 contracts, levels last seen during the 2008 crisis, is not just a routine decline in activity. It signals something much deeper, a structural withdrawal of liquidity from the market, and that's where the real risk begins. Because when participation drops, markets become thinner, and thin markets don't create stability, they amplify volatility. Price swings become sharper, faster, and far more unpredictable, shaking out weak hands in the process.
It's not necessarily what is done on the gold and silver futures market that is so unjust, but the existence of the market itself. Really, all other commodities should be priced in gold and silver ounces, and dollars should not be traded for gold and silver ounces on a futures contract basis. But in any case, we are now seeing what happens when the physical market decouples from the futures market is going to get more extreme from here. We are also seeing something very interesting in gold miner stocks, gold and silver mining stocks. They are not declining in gold terms as they were during the last gold and silver bear market. They are near their highs in gold terms. Priced in gold ounces, gold and silver mining stocks are still very near their recent highs, which means that this is something else. This is not a bear market. This is the dollar trying to reassert itself in a global crisis in which we are in, as the Straits of Hormuz are still closed, so they are opening up slightly. And tomorrow apparently is the effing Straits Day, as President Trump has said. It's also the 7th day of Passover, the 7th day of Pesach, when it was God opening the Straits of the Red Sea.
God opens the sea with the blast of his nostrils.
For the children of Israel, is that a coincidence? I don't know. And finally, we have Japanese rates breaking the 2.4% mark. That hasn't been hit since the Asian financial crisis of 1998. This is the final support for rates. And after that, we are in outer space for Japan. And Japan gets most of its oil, I hear 90% or more, from the Strait of Hormuz. They are in dire straits, pun intended. And if they fall apart, the entire Western monetary system falls apart, the entire fiat monetary system, which is based on the dollar, with the yen a close second, based on the deal that America made with Japan and Tokyo after the nuking of the country. As that unravels, the Western monetary system unravels, and gold and silver reassert themselves as money in direct exchange, because there is nothing else to do once the dollar and the yen collapse, and they will collapse together.
Curious about investing in gold and silver, but feeling confused due to ongoing global uncertainties? This ebook is specially designed for new investors who feel unsure about investing in gold and silver trading. It breaks down strategies in a simple, practical way, helping you make informed decisions and invest in the right direction. Over 100 people have already taken the first step with this ebook, and today, they're living proof that smart investing can change lives. Start investing fearlessly, wisely, and with a clear strategy. Hurry! Visit the link in the description to get your copy today. When mining stocks refuse to fall, it's often a signal that something deeper is unfolding beneath the surface, something beyond simple price action. As Rafi Farber highlights, the fact that gold miners continue to hold near their highs, even when measured against gold itself, points to underlying strength in the sector. But the real story goes far beyond mining stocks. What we're witnessing is a buildup of macroeconomic stress that many analysts are still overlooking. Japanese bond yields have surged past 2.4%, a level not seen since 1998. At the same time, rising geopolitical tensions and potential energy disruptions around the Strait of Hormuz are adding pressure to an already fragile system. These factors are not isolated, they are deeply connected. The missing link here is currency risk. If the Japanese yen continues to weaken, it could rapidly tighten global liquidity. And when liquidity tightens, the impact doesn't stay local. It spreads across global markets, putting pressure on equities and risk assets worldwide. This is where it all converges. Macro stress doesn't just sit in the background, it drives capital flows. As uncertainty rises, capital begins to move, seeking safety and stability. And that shift is what ultimately shapes the next phase of the market.
And with that, let's go to the slides. Here, guys, is the chart that shows you that the gold price is decoupling from the gold and silver or the gold futures market. Gold open interest and price no longer correlate. We have a fluctuation in the gold price between $4,000 and $5,400. That's a $1,400 fluctuation area. And we see here that the price is going up and down since February, since the top here in gold and silver. This is gold specifically, but you can see here since then, open interest has collapsed to around 400,000 contracts, and the price has been going up and down wildly from about 46 or 4,400 down here to about a top of 5,500, 5,400, and then a bottom again of around 4,000, maybe 4,100, and then we're up here to about 4,800 again. And you can see here in the correlating open interest numbers, these are these bars down here, you can see pretty easily that the open interest hasn't really gone much of anywhere from February to the middle or the end of March. And it has fallen from about 400,000 contracts to now about 350,000 contracts.
Do like, share, comment, and subscribe to this channel. Also, don't forget to hit the bell icon for more updates.